the provider tax work group comes up with and where they end up going. So that's a kind of an interaction between those two plans. But right now, our estimates are based on the assumption that nonprofits are exempt, and although I don't think there's a consensus on their work group that necessarily that's the way you want to go, or they may want to have some exceptions.
Follow up? Thank you. We talked about the Oregon Department of Revenue and that this would be new to them. Has the work group or have you folks had any conversation with them about how their new Gen-Tech system could accommodate this transfer? I'm assuming it's relatively easy, but I just want to know if that's the case.
Representative Smith and Mr. Co-Chairs, yeah, we've had some preliminary discussions with them. We've had, Senator Haas mentioned a rough draft that we've gone through, and we've actually had councils drafted some commercial activity type taxes in the past. So we've had them go through that and give us some input on areas where they would anticipate issues. But we haven't gotten to that detailed level of discussion at this stage, but certainly that's a key element. As I said, our anticipation would be that this would be a less expensive tax to administer over time. But again, you have a transition period where you're going to have both taxes up and operational at the same time as you're clearing out the corporate income tax. Another thing to keep in mind about the current corporate income tax is the way the filing schedule works. Businesses, they choose their fiscal year, so you'd have the corporate income tax would be eliminated for corporate tax years beginning 1/1/18 or whenever that start date is, and so you'd have kind of a staggered effect on the corporate returns and when they stop coming in.
Got it. Just two more follow-up and then I'll be done. It's really interesting. All of us have already started receiving the phone calls and the emails of vote no on everything or vote yes on everything before the details have even been released.
Yes.
And I appreciate, Mr. Co-Chairs, that I think you've got a good group of folks here that are open-minded. And so I have two questions that are genuinely asked with an open mind. Do we have any evidence or has any evidence been provided to the committee that this new form of taxation has discouraged economic development in Ohio or encouraged economic development in Ohio?
Mr. Co-Chair, as Representative Smith, we've talked a lot with Ohio about their experience, and of course, and all situations are unique. They packaged their CAT with a reduction, with an elimination of what they call their franchise tax, which was their corporate income tax. And they said they had a lot of complaints about that, about its complexity, and there was a lot of support to eliminate it. But they also coupled it with a reduction in personal property taxes on business. So that was a significant factor. As they described to me, they're a capital-intensive economy, and that was a significant factor. So the net that they felt of those changes was generally positive for the Ohio economy.